Hello, good evening, everyone. Good to see everyone once again on this Friday evening. The time now is 11:31. Okay, today is the 11th of March 2022. All right, so if you guys can hear me loud and clear, please say a hi to me in the comments. Okay, just to make sure that everything is good, everything is well. Okay, as usual, I'm very friendly. I won't bite you. Okay, so just say a hi to me. Do engage with me. Give me a like, share, or comment. And also to tell Facebook algo that you want to see more of MarketWise Asia content in the future. Because if you do engage with me, at least give me a like. Okay, Facebook, you think that you don't like our content, and in the future, it will start showing you lesser and lesser of our content on your Facebook feed. So liking is free, doesn't cost you money. So just give me a like, okay? At any point in time, right? If you think you enjoy, if you enjoy, the things that I'm saying, I'm sharing with you, do give me a like, okay? So let me take a look at the comments right now. So right now it's about 121 people in the room. All right. Good evening, Han Ho, Bings, SP, Amanda, Sita Chai, Yan Ming, Eddie, Dom, Avery, Ethan. Okay, Jolene, SJ, MH, Wheeling, Dan, Mary, Kit Leong, Gabriel, Pei Wen, ZJ, Mark, okay, Wiki, John, Lim. All right, good evening. Okay, so good to see everyone of you here. All right, so I think there'll be more people streaming in. So recently this week, the market not easy to trade. I'm not sure how many of you, felt this way. Some of my position, I intend to hold a little bit longer. For example, my QQQ, my Nasdaq, after price move in favor of my direction. Okay, I long. So after that, I took some partial profit. The next day price just came back down again. So good thing is I managed to shift my stopping time and such. So I didn't really make a loss, still profit, but just that market can be quite volatile for the past 1 week. So not easy to trade, not easy to trade. So the easy time, before the war, that was a very clear cut downtrend. Now it's not so easy. Okay, I'll share with you more later. Okay, so hello Vico, James, Mark. All right, so as usual, let me share my disclaimer first. Okay, so as usual, my disclaimer, whatever I share today is just for education and informational purpose. It is not a recommendation to tell you what to buy or what to sell, unless it's always wrong. So please don't copy me. Okay, so disclaimer done. My opinion, this is just an opinion, doesn't mean that my opinion is right. So please do your own due diligence. So today's sharing, I think there are some things to cover, but I'm not sure whether it'll be in depth or whether I have enough time or what. So let's just go through the flow, okay? So chill, relax, and just talk market, okay? So of course, is it the end of the bull market? This is what I put it in the MarketWise Asia, description, okay? And what can you do as a trader when there's so much uncertainty and volatility, okay? So I'll share with you what you can do. Of course, this is I would say this is a little bit of clickbaiting, okay? And my stand still hasn't changed for the past 2 weeks. I still think that we are still in a bull market, but there are certain level which I think, okay, price shouldn't break at certain level, okay, which I think I mentioned in my Telegram channel already, but I'll just to reinforce the ideas and also to share with you, reinforce the ideas basically to share with you again. Okay, maybe some of you are not in the Telegram channel, might not understand what I'm trying to say. All right. So before I kickstart this session, 180 people, just give me a like, share, or comment to engage with me. If you don't want to share, don't want to comment, at least give me a like. This is just to tell Facebook algo that you want to tell Facebook algo that whenever I go live or whenever I have more information on I'm to share with you on the Facebook page, right? You are able to see it, because if you do engage with me, Facebook will not show you in the future. Okay, so just to share with you that we have this Market Insights Virtual Summit that's coming up in April. All right, we are officially launched already. So this is the Market Insights Virtual Summit. Very nice website, right? Okay, done by our designer. Okay, so this is as usual. Okay, this is proudly sponsored by IG. So the date will be on the 9th and 10th of April 2022. As usual, Saturday and Sunday. This time around, we have new speakers. Okay, and of course, we have the, as usual, some of the resident speakers that have been that has been with us. Okay, so of course, this is Rainer Teo. I believe most of you should know who he is. Okay, he's also a good friend of mine. Personally, I know him personally. Okay, and if you ever search some trading materials, trading style, candlestick patterns, whatever it is, there's a very high chance that you will come across his YouTube channel. Yes, this is the Rainer Teo from the YouTube. Okay, so he has right now 1.48 million YouTube subscriber now. So I remember when I first invited him, I think last year March, he just crossed the 1 million mark only. So after he crossed the 1 million mark, okay, the numbers just increased exponentially. So right now he's nearing 1.5 million already. Okay, and of course we have Margaret from IG, Margaret Young, and also Jing Rong from IG as well. And this time around we have invited the fifth person. They have also quite a number of YouTube following as well. Royston Tan, okay, and Joe Osteen. Okay, I think some of you might know. All right. Yeah, Joe Osteen, the MC. Some of you might not know he has also been trading the FX market quite actively. Okay, and he's a good friend of Colin also, and he'll be doing a panel discussion with Colin and also Royston as well. All right, we've invited Alvin from Dr. Wealth. Okay, so there's quite a number of speakers. Jay Tun as usual, Terrence Tan as usual, and Binnie Ong. Okay, Binnie Ong also a lot of things I learned from her, also especially the wash and rinse trigger. Okay, so let me share the link to you in the comments. You should be able to see it. Okay, yeah, this is the link in case you don't see it. All right, this is the link. Okay, marketwiseasia.com/April 2022. And by the way, right, okay, you also get to receive and participate in our lucky draw. Okay, we have this AEP e-course, The Art of Explosive Profits. Okay, by Jay, that's worth $697, a Huawei watch fit. Okay, 2 watches. Okay, and 2 Lazada vouchers as well. So all you have to do is just to register for this event. Nothing to buy. Okay, just register for the event. We want to have as many people as possible. All right, and I'm going to also give you this exclusive ebook. It's not published elsewhere. All right, this is the book, How to Spot Any Trends in Just 3 Seconds. Trendmaster by me, okay, written by yours truly. So just register and you get to have receive this free ebook and also participate in our lucky draw. So once again, I will share the link in the comments to register for this event. Okay, and also subscribe to our Telegram channel and also our YouTube channel. Right now we have about 4,500 to 4,006 people in our Telegram channel already. Okay, I'll post the link in the comments as well. Okay, so right now we have 233 people. So welcome. I'm about to start already. Okay, so I'm not sure about you. Okay, so let's get started. I'm not sure about you, right? So in recent days, this stagflation, I mean, this stagflation is something that I hear quite often recently. Okay, stagflation. Okay, if you have been hearing stagflation recently, okay, just type letter S in the comments. I see people posting about it. I read Taman, our minister, talking about it also. Okay, if you come across this, right, just type S in the comments while I take a sip of water. Or you are still inside a rabbit hole, you never heard any people talk about stagflation, that is fine as well. But if you hear people talk about stagflation in the news or whatever, type S in the comments. All right, quite a number of you, I can see the comments coming in also. So, all right, stagflation, you can just Google about that. Basically, stagflation is the combination of stagnant and inflation. Okay, the definition you can just Google, very easy lah. Okay, is characterized by slow economic growth and relatively high employment and inflation as well lah. Okay, accompanied by rising prices, inflation. Okay, this one you can just Google, very simple. I don't want to explain too much something on, you can Google one. All right. So just want to go to this Google trend. All right. If you go and search for stagflation, okay, STAGFLATLN, stagflation. All right. And then you see, even in Singapore, I can see that there is quite a number of interest, and it's picking up. Okay, this is trending right now. Stagflation is trending right now, and Google projected in the near future it is going to be increasingly more trending as well. Okay, this is just for Singapore, and if you search the US worldwide, all right, for the past 12 months, initially was just flat all the way, a little bit increased last year, but after the Ukraine and Russia war invasion, right, so this starting to pick up. Okay, all right, so stagflation. And recently, of course, Taman also mentioned about this in the news also. The world faces perfect long storm, Ukraine, blah blah blah, Omicron, stagflation. All right, so this is unprecedented. This called this the perfect storm and such. Okay, so you can read this. There's quite a number of channel posting about Taman's comments. Okay, you can just Google, but I'll post a link in the comments also. Okay, so you can just go and read. Stagflation, okay, if I'm not mistaken, okay, I think only happened in the 1970s. At least this is based on what I've read. Okay, I'm not born in the 1970s. I'm born in the 1980s. So I'm the 80s late millennials. Okay, so yeah, stagflation. So in the 1970s, there's also stagflation. All right, basically there were two oil price shock in 1973 and 1979. So going back to history already, so just to do a very quick one. Okay, so this was the period where there was stagflation also. So basically low economic growth coupled with high inflation. All right, and the 1973 one, right, is actually started by this Arab-Israeli war. I think another term for it is the Yom Puki, or don't know what, I forget the name already. Okay, so the Arab-Israeli war, and the 1979 is by, let me try to think. I forget the name already, but never mind. I forget the exact term, but yeah, the 1979 is the Khomeini revolution in Iran, and then the Saudi Arabia event, and also the invasion of the Afghanistan by Russia. So these were the events in 1970s. Okay, 1970s. And soaring food and energy prices trigger a wage war spiral, and then which caused consumer prices to soar in the US. Okay, and this time around, right, it isn't much different. This pandemic is excessively caused by the fiscal and monetary policies, and which caused a demand shock, and then the demand shock will cause a supply shock. Okay, right now I think you guys heard about this supply shock, right? So it's not really the demand. There's a bottleneck in the supply. So and coupled with the Russia and the Ukraine invasion, Russia actually export a lot of raw materials and energy. So this cause a supply shock also. And consumer price inflation has been soaring since March 2021, and because of this war, it exacerbate the commodity pricing. And yesterday, the inflation, right, reaches 7.9. Joshua, yes, Yom Kippur War. Yes, I forget the term, Yom Kippur War. Yes. So yesterday, the inflation go to 7.9%. That's the highest for the past 40 years. Okay, and given such, right, so will the oil prices, right, for the past number of times, right, high oil prices will lead to recession. It will lead to recession. So let me share with you this. Where is it? Over here. So will these high oil prices, cause the next recession? So I'll post this. I'll post this link in the comments. All right. This in comment. So this macrotrends.net. All right, so I think you guys can see over here. Let's do the inflation adjusted price. This is basically the price of the oil prices over here. Inflation adjusted. All right. So, and you can see that these are the gray areas. The gray areas represent recession. Because this is inspired from Adam Kura. So I think if I think today Adam actually published a blog post and talk about, when there's always when there's high oil prices, a lot of time it trigger a recession as well. So after that, I go and research on that. It is really true. Okay, you can see that in the 1970s. Okay, 1970s over here, 1970s, high oil prices, shot to $60. All right, it actually triggered a recession also. 1980s, recession. Okay, all right. Then 1990, late 1990s, I think. Okay, late 1980s. Okay, there's also a higher prices then trigger a recession also. And then of course 2000 is the dot-com crisis. It also triggered a recession, not exactly very high, the oil prices, but relatively high over here. And then of course this is the 2008 financial crisis, where oil prices hit 140 something dollars. If I'm not mistaken, it's 147. Okay, so it also triggered a gray area of a recession over here. And of course the latest one was actually the COVID crash. Okay, but it didn't trigger, as in it was not caused by a high oil price. In fact, at the point in time, the oil price actually went to negative. Okay, at least from the futures price. Okay, went to negative, and there was also recession. So in today's context, price for the oil is above $100 already. So will it trigger the next recession? Okay, I do not know. But I read some news and such, and there are quite a number of people starting to believe that stagflation is real. It is coming. So stagflation, it is not easy to deal with. Okay, I am not an economist. Okay, so I won't go into that, but can be troublesome when stagflation comes. All right, because high oil prices, when you spend too much money on gasoline, on your oil prices, you have less money to spend on your luxury goods, your day-to-day other expenses, your entertainment and such. And when you spend lesser, the companies are not making profit. When the company's not making profit, they start producing less and lesser thing as well. Then you lead to a spiral, continuation of this low economic growth, and coupled with the inflation as well. So yeah, so this is basically what is happening right now. Can I just have a show of hand based on your, I don't know, it can be just your gut feel, if you think that if you think that inflation is here, right, to stay for a prolonged period of time, right, you can just type me in the comments. If you think that it is really just transitory, at some point in time, maybe this year, next year, inflation is going to come down back to normal again, just type no in the comment. If you think that inflation is going to go up, just type me. Okay, if you think inflation is not going to come, it's going to come down soon, just type no in the comments. Just have time to have some consensus on your views and such. Okay. My answer is I don't know. I'll just be frank with you. I really don't know. Okay, but it seems to me that I've also listened to Larry Williams based on his cycle forecast. Right, he believed that we might be hitting a peak on the inflation, but of course, the peak doesn't mean that it's going to drop to 1%, 2%. It can drop to maybe, I don't know, 4-5%. And I say, Yeah, 4-5%. Right now 7.9%. Right? It can drop a little bit, but he think that we might be hitting a peak already. Okay, so maybe along the way, the next few months, 1 year, that kind, maybe 3-4-5% that kind. I think that is possible. If you're asking me whether we'll go to above 8-10%, 12%, personally, maybe I won't think so. But maybe 4-5% persistently, I think that is possible. This is just my opinion. Doesn't mean that I'm right. I'm just guessing because I really no idea what it is going to do as well. I'm not a trained economist. Okay, I'm a trader. All right. So let me see the comments. Quite a number of saying me, but there are also a few no as well. Mary type no very big. N-O. All right, so yeah, so let me go through the okay, this is done. Okay, so let me just go through this. Is it the end of the bull market right now? Again, do participate with me, do engage with me, right? How many of you still think that it is a bull market? If you think it's a bull, all right, just type bull in the comments now, okay? If you think that, we are really in deep shit, because of the war, whatever it is, the inflation, whatever it is, being a slowdown, whatever it is, think it's a bear, just type bear in the market, okay? Within the next, the time frame is important, within the next, 2 to 6 months, you think that, we're going to recover, or you think that we're going to in deep shit and go into a bear market, just type bull if you're bullish, just type bear if you are bearish. All right. Okay, so let me just go through the chart right now. Okay, so right now, how is the market doing? The Nasdaq is down 0.2%. S&P 500, it is flat, about 0%. Dow, it is up about 0.35%. So the market still pretty flat today. All right, so let me take a look at the comments once again. Oh yeah, I see some comments from YouTube. All right, by the way, if you are from YouTube, I welcome you, and please give me a like and also subscribe to our YouTube channel. Okay, I will really appreciate that. Also to tell YouTube algorithm that so that whenever I do live, there'll be more people able to see it. Okay, so let me see. Short-term bear, bull, bear. Mark is saying correction status can get worse if the war persists. Okay, bear, long-term is account. Okay, there's a Wong saying that bear, bull. Actually, you guys can see from your own comments, right? Actually, the reaction is quite mixed. There are some bull, there are some bears. All right. So I'll just share a view from a trading perspective. Hello, Hadley. All right, so from YouTube as well. So just share a view from the trading perspective, right? So I also mentioned many times already, right? If you don't believe me, just go back and check my past 2 Facebook Live or on YouTube as well, stream on YouTube. All right. So I mentioned that, and also from the Telegram channel over here. Let me see. Is it here? Yes. So this is the Larry William forecast over here. Later I will share with you again. So what I mentioned previously is that, personally, I'm still bullish as well, as long as the indices don't break and close below the recent swing low. All right. So the recent swing low, this is from the Nasdaq. All right, this is the Nasdaq chart over here. The recent swing low is this one. It is over here. This is the recent swing low over here. This is the swing low. At this moment in time, we are still above this swing low. All right, for the S&P 500, the swing low, it is also over here. All right, this was in 24th of February. Swing low is over here. We are still above the swing low. All right, and for the Dow, okay, we are also the same. So far, none of the 3 indices has broken the prior swing low. This is the swing low over here. So we are still above the swing low. So as I mentioned in my past Facebook Live, all right, for the Nasdaq. If you take a look at the weekly time frame, okay, weekly time frame, all right, we are still supported by the cloud. Okay, so that's the reason why I am still bullish. Okay, I think if you have been listening to me for the past 2 weeks, you should know already. But just to reinforce the concept, the way how I read the market, okay, don't think that I'm too lost or okay, long-winded. Okay, yeah. So just to reinforce your idea, all right. So can you see that ever since the uh COVID crash, okay, supported by the cloud, we have never been below the cloud. So above the cloud, all right, we are still bullish. All right, so we are still supported by the cloud over here, because if price break the swing low over here, right, by then we are already below the cloud already. So below the cloud, based on my systematic way of analyzing the trend, okay, this will be below, this will be in a downtrend already. So for those who are new, okay, if you want to know how I can just spot the trend in just 3 seconds, okay, go and register for this April summit over here, Market Insights Virtual Summit. I'm going to give you this free book, Trendmaster, How to Spot Any Trends in Just 3 Seconds. Okay, the ebook, it is over here. Okay, you can follow this link, and I also post the link in the comments. All right. So this, okay, so important, price cannot break the low over here. All right. So if price, for let's say for Nasdaq, of course Nasdaq is the weakest, right? So if Nasdaq broke the low and price is below the cloud in a downtrend, okay, so which means that for the S&P 500, there is still some downside to go, because once again, after the COVID crash, right, price broke the cloud briefly, but ever since, right, price has never gone below the cloud. All right, so right now it is still hanging on the lifeline by the yearly pivot. Okay, yearly pivot, it is this black dotted line over here, right? This black dotted line over here. I try to zoom in. This black dotted line over here. So we are still supported, struggling. Okay, so if price really broke below the low over here, all right, so from the low over here to the cloud support, to the next level of support, the market can actually drop another about 5 to 6%, 5 to 6%. Okay, this is the scenario, minus 5 to 6%. So that is at about 3,900, about that. If really price cannot withhold, oh no, okay, all right, price drop to this level. All right, for the Dow, it is also the same. All right, so we can see that there's still some spaces near the cloud support. All right, if price break the low, you can expect price to drop about the same, also another 5%, another 5%. So that is at about 30,750. Okay, 30,750, thereabout. All right, so let's say in the current situation, because of the volatility, because of the Russia Ukraine, right, because we don't know what the fuck is going to happen between Putin and Zelensky, right? So at this moment in time, if there's no new news, okay, which I doubt so, all right, I think price will go lower. Unforeseen circumstances, if the price, as in if the war really got worse, more people die, I don't know what else thing happen, then we could, go down further. So we shall see. I think we shall see, okay? But right now, I think as of now, I am still bullish lah. As of now, I'm still bullish. So this is the Nasdaq, price shouldn't go below the low. All right. So go back to the Larry Williams over here. Okay, Larry Williams over here. Okay, so by the way, I have invited Larry. Yes, I do some email exchanges with him. So I talked to him, invited him. He will be in the next summit in July. Okay, actually, I'm quite excited because for those who don't know, Larry Williams is really quite famous lah. Okay, ever since I started trading, I've also read his book as well. So yeah, he has a lot of knowledge, to be shared with you. And I think if you're talking about cycle forecasting, he is the number one in this field lah. Okay, so I'll be inviting him in July. Okay, of course we settle the April 1st now. Rainer will be speaking. All right, so this is the stock market weekly cycle forecast. He just conducted his webinar, I think just a few days ago. I think on Wednesday. So yeah, ignore this shade area. Basically, he thinks that we are at a cycle low already, which is actually now about the time. This is about March, late February to March. So this is a cycle low. So which he forecast price can start to go higher up. And which I mentioned in the Telegram channel, this is not about the magnitude. Doesn't mean that price will hit this level high or such. It can start to bounce like that. After that, go a little bit higher, ping pong. After that, the price come down again. It will not tell you how high the market will go, how many percent the market will go. It just tell you that this March timing, it could be presented a buy opportunity. Okay, a cycle low. All right, can see that over here. Right, this is a cycle high over here, cycle low. Okay, it doesn't mean that this cycle low and this high will go up even much higher. No, so it just tells you that this is the cycle high. Price could come down a little bit more. This is the cycle low over here, and then continue to go up. This is cycle high. Cycle low is somewhere around here. All right, cycle high again. All right, this is a selling opportunity. All right, and then this is the cycle low. All right, so who is wrong, who is right? I don't know. So for me, I am still with Larry. I think I'm still bullish at least within the next few weeks or so, as long as price doesn't break below the prior low. Okay, doesn't break below the prior low. Okay, all right. Janice asked a question. Good question. What is the difference between seasonality and cycle? Okay, seasonality, there is a fixed timing from January to December. Okay, just like I'm going to tell you that for some commodities, for example, gold, silver, platinum, right? Actually, at this period of time, March, all right, it tends to be the seasonality that it doesn't do so well. So it's starting to fall. Okay, yeah. So it's kind of fixed from January to December. There are certain months. It's always repeatable. For cycle, it is not really so sweet. Every every March or every April, it will go up that kind. And the cycle, could last many years, many months. Okay, so you can treat it like the stock market cycle, the bull and bear market. Bull and bear. Sometimes the cycle, the bull market can last for 5 years, 10 years. You won't know, but the bear market can last for just a few months, 1 year, 2 years. So you know that there's a cycle up down, but you can't determine the exact pinpoint, exact time, that kind. Okay, so this cycle forecast, right? I don't know what method he uses. Of course, there's some solution that he uses, but it will change along the way. So it's not like seasonality is from January to December, fixed kind of month. All right. So I hope that answer your question. All right. Chris is asking, daylight saving time, can consider starting your talk next Friday at 10:30 so we can sleep earlier. I wish I could, but I can't because I'm still handling my baby girl. After that, by the time I'm done, ping pong, I chill a bit and such. It is 11:30 already. So actually, if I want, the best timing is to start at 8 p.m. But I can't. So yeah, I will still start at 11:30 p.m. So yeah, even though, yes, by the way, next week onwards, right? The daylight saving time, the stock market will open at 9:30. Okay, you no longer open at 10:30. Okay, yeah, all right. Darius is asking 10:30, 11:30. That's the best timing. Okay, so Ken, so I know there are some I don't know, some educator, trainer, I don't know who lah, okay, whatever it is, maybe fear mongering or whatever, they try to scare you, there's a much more downside to come, be prepared, that kind lah, okay. It is okay. I respect their views and such lah, but for me, I try not to do this kind of fear mongering lah, okay. Try to be objective, all right. So as I mentioned, right, who is right, who is wrong, only time will tell, okay. All right, so my advice in the Telegram channel is that, don't believe and have too much conviction on any of our views, including me. When I say that I'm bullish, okay, you can just reject my words if you feel that you are bearish about the market, okay. Don't listen to me. Listen to our opinions with a pinch of salt, okay, and learn to have your own judgment. This is very important. This is very important. Okay, so enough of that. So this is just my personal view of the stock market right now. The market right now, it is still coming down. We are still struggling until the price is broken, the string will close below it. Then I might start to turn bearish. But right now, I am still bullish. Okay. And yeah, so right now, what can you do as a trader when there's so much uncertainty and volatility? Okay. All right. So as I mentioned, right, you need to be mindful of what happened below 2020. Okay. So let's go back to the 2020 to the S&P 500 naked chart. I like naked. Okay. I like naked. Okay, all right. So this is the naked chart over here for the S&P 500. All right. So you need to realize, okay, after the COVID crash, this movement, it is not typical. This is a very, very strong bull market rally. All right. I started trading the market in 2011, okay, 2011. All right, when I first started trading, not really trading, when I first involved in the financial market, my whole idea was to, I have some spare cash and I wanted to invest in the market, okay. But subsequently, I go into technical analysis, but there's a long story. I'm not going to that. I remember when I attend a course, okay, it was in April. April is somewhere around here. I draw a vertical. If I put that, then a lot of lines really. Yeah, well, but never mind. Okay, April, it is somewhere around here. Okay, April is somewhere here. Do you guys remember what happened in 2011? More than 10 years ago already. Do you guys remember what happened in 2011? Okay, 2011, after I invested, all right, there was this euro debt crisis. Okay, I'm not sure how many of you are actually remember this or involved in the market. When I first, after I attended the course, I feel very gung-ho, I put in 5-figure amount of money inside that kind when I'm still a newbie, nothing much, price. After that, because of the euro debt crisis, market just kind of crashed. At that point in time, I was pretty scared because that was the first time I encountered such volatility. Okay, if you can recall, I'm not sure whether you can or not. Really, there's a lot of volatility, up down. One day is good, one day is bad, one day is good. So because I was new, I was quite shaken by the volatility. Whenever I invested, I also divest, also exited because I scared. At that point in time, my mentor, he also like, because I treat him as an authority, right? He's more, I feel he has more expertise than me. He's the expert, ma. And he think that, you know, another market crash is coming. So of course now, my mentor said crash is coming. I follow him, just exit my stock holding, you know. Subsequently, you know, price market just, of course, you know, the volatility continue, but after eventually the market just go up like that, lah. All right. Then, you know, you realize that, you know, from 2015 to 2016, okay, it is uptrend. It's a pretty nice uptrend from 2013 after the Euro debt crisis is gone, okay, about 2 years, okay. Then you realize that from 2015, late 2015, 14, late 2014, okay, to about 2017, this whole period is actually consolidating, all right. It is not easy to trade. And that's the reason why in 2014, I happened to pick up options trading, and this period was quite fantastic. Because I was selling options. Okay, you know, market, it is not really moving up, down, that kind, you know, doing pretty well on options trading also. So this period of time, market is not really trending from 14, 16, 17, about 2 years plus, it is not really trending. All right. Then after that, 2017, okay, it's trending again. Okay, still a pretty nice trend until 2018. There's a steep market correction. 2019 also. All right, and of course, then there was this market crash. All right, COVID crash. This is a weekly chart. This is a weekly chart. All right. Then after that, something just happened. Okay, just do like this. The market just boom. Okay, just do like this. If you just, you know, step back, zoom back, and take a look, all right, the market after 2020 is kind of crazy. Okay, so normal trending market, correction, then this is kind of exponentially going up. All right. So you need to understand this market condition, it is not normal. And, you know, I was discussing with a few of my friends prior to the 2020 COVID crash. You know, we were discussing, no, actually, you know, we just felt that before this period, right, after the financial crisis in 2008, right, until before the COVID crash in 2020, all right, there was no market crash. There was no another great financial depression, you know, financial crisis as such. We were wondering, thinking, okay, when the market crash will come, because there was no catalyst. There's no catalyst, okay? You know, it's just grinding up, trending up all the way. And I'm not sure whether you remember also before 2020, I think there was some news or report saying that, you know, the participation, all right, from the youngsters and such in the stock market is getting lesser and lesser already. Okay, and there was no euphoria stage in the market. So if there's no euphoria stage, right, there's no way the market will crash lah. Okay, it is only until 2020. Again, we can't tell whether this is really the euphoria or not lah. Whether this is really euphoria, because this rally is really, you know, not normal, out of the blue. Okay, just pump all the way. All right, and there are many new traders. You know, those young guys, just teenagers, early 20s, that has never experienced the 2008 financial crisis. You know, after the 2020 COVID crash, they just went into the market, all right, and they are just, you know, investing in all these tech stock, you know, growth stock, you know, the sexy story about growth stock. You know, these are the stocks of the future and such. You know, value investing is dead. You know, growth stock, you know, buy the fucking dip. You know, this is really a term. If you don't know, buy the fucking dip. So, you know, buy the fucking dip. This is really a real acronym, buy the fucking dip. So they are trained to do so after the 2020 COVID crash. Okay, whenever there's a small dip, they buy, market sure go up. Whenever there's a crash, whenever there's a correction, they just buy the dip, market continue to go up. Whenever there's a small correction, just buy the fucking dip. This happened for 2 years. They are trained that, you know, whenever there's a market correction, back to the daily time frame, after 2020, right? They are trained, okay, to do this, okay? Market, to them, the market always goes up, okay? After a correction, always goes up. So I think this is the first time they are experiencing that, you know, market can do like this, okay? Right, market can do like this in a prolonged correction, and the market can do like this also. PayPal, the market can do like this, okay? They are trained after 2020, you know, correction, just buy the fucking dip, just buy, you will not go wrong one. Then PayPal do something like this, you know, C limited after all the tech stock valuation reset, you know, market can do like this, okay? So they are trained to do that already. 998, it is also the same, okay? Whoever talk about China stocks, I think every single Tom, Dick, and Harry are already invested in 998, Alibaba. Okay, whenever we talk about Chinese, most people invest in Alibaba one. So market can do like this also. And by the way, I know some of them are holding, but you know, initially I was just joking with my friends. You know, Alibaba all the way dropped 998 Chinese 998, right? So it went to 99. And today, really in the Hong Kong market, Hang Seng, right, it really dropped to 88 lah. So market can do like this, you know. So, you know, I feel that I'm quite fortunate. You know, that, you know, I get involved in the market in 2011. All right, this is over here, 2011, where the moment I enter, all right, price just crashed because of the euro debt crisis. Okay, so I am trained in this harsh condition. Okay, yeah, along the way there are also a lot more correction, and the market doesn't trend that nicely. Okay, you understand what I'm trying to say? It doesn't trend that nicely. No, and from 2014 to 2017, market is kind of flat. So I'm trained in this kind of condition. Market don't always go up in a straight line. Okay, and I'm trained that, you know, respect the risk, don't go all in, okay, and such. All right. So right now, if you are a trader in this context, right, all right, I think this right now here, this is a very good training ground for you. Okay. Again, I'm very used to this kind of condition already. I mean, I really prepared that market can do this kind of correction. Okay, can go for a few months, 2 to 3 months correction. So I'm well prepared. But for those who just entered after 2020, especially those youngsters, they are not prepared. Okay, maybe I say until I'm very old, but I'm not. I'm 39 this year. So, but yeah, but I'm trained in this kind of harsh condition. So for you, if you are pretty new to the market, especially if you enter after 2020, I suggest to you, okay, there's 2 ways you can do. One is to stay away from the market until, you know, the market go back into an uptrend, okay? Or if you are skillful enough, all right, you can short it, right? But shorting in a bull market, it is not that easy, okay? Another way I can suggest to you is that you trade smaller, still actively trade in the market. And just to be clear, I'm talking from a trading perspective because I'm a trader. I'm not those buy and hold. Trading can be a position trader where you hold for few months to about 1 year, that kind of position trader, or can be a swing trader holding for a few days to 1 to 2 weeks, that kind. So that is fine. So I'm talking in terms of a swing trader and a position trader perspective. All right. So I suggest that you still continue to trade, but trade smaller. All right. The money, the capital, it is not really important. The important thing is that you continue to participate in this kind of market condition, because if you don't put your money at stake, if you don't have skin in the game, you won't have emotion one. If you won't have emotion, if you paper trade, right, then you aren't able to feel the market, the fear, the greed, and such. All right. So and nowadays, because of the brokerage fee, it is quite cheap right now. So I think it's okay. You can just trade very small size using CFD, IG, or whatever it is. Okay, you can trade very small size, and you still can participate in the market and have a feel of when you enter the market, market go against your way, and that's that kind. How do you feel? How do you react and such? And this is absolutely a very good training ground for you. Okay, I think I speak quite a bit on this topic. So I'm not sure whether I'm too long-winded, but again, this is just my sharing. If you agree with me, you can just type agree. If you don't agree with me, you can also type disagree. I'm fine with that. So my suggestion to you is that still continue to trade, okay, but trade smaller, because there's so much volatility. Okay, a lot of times when you trade, if you put your stop too wide, your risk reward is not there. Too narrow, you get stop out. So, but again, I will still trade because you are trained under this kind of harsh condition. When the bull market comes again, right, it be relatively easy for you. Okay, that's why they say, bull market, any Tom, Dick, and Harry, any monkey can make money. But the real condition comes when there's a correction, market doesn't move that nicely, that's where your skills matter already. Okay. All right. So right now we have about 300 people in the room. 12:30, still quite a number. So I'm not sure how many of you are new to here or just joined. All right. So we have this Market Insights Virtual Summit that's coming up in April. Rainer Teo, all right, the YouTube stars, with 1.48 million subscribers, is speaking to us. Okay. And we have a number of other Power Pack speakers as well. Fifth person, Dr. Wealth, Jun Rong and Margaret Young from IG, and we have Joe Osteen, not Joe Osteen, yeah, so Joe as well. Okay, so Joe Augustine, sorry, not Joe Osteen. Joe Osteen is the pastor. Okay, yeah. So yes, so and register now and also get to participate in our lucky draw and also receive this report written by yours truly, Trend Master, how to spot any trend in just 3 seconds, where I'll share with you my way of reading the cloud and such. So very simple, just click on the register now, fill your name, email address, and mobile, and you are good to go. So this is the link over here. Okay, I will post the link also in the comments. I'll post the link in the comments. All right. And yeah, and also do subscribe to our Telegram channel and YouTube channel as well. We have about 4,006 people in the room, in the channel soon. I'll post a link in the comments. Okay, so 12:30. All right. So something to share with you guys, some trade ideas today. All right. Yeah, I'm going to share with you this emerging market. So yeah, another tip I can share with you guys is that if you think the US is actually in a correction mode, difficult to trade, right? You don't have to just die, force yourself in to trade the US stocks, okay? And you can trade some of the other emerging countries, okay? So let me share with you this. I mentioned before, I think at the start of the year, right? This Nobel investor. I'll post the link later. Let me share with you the tool. Is it over here? Asset class return over here. All right, I'll post the link in the comments. If you realize, just follow the color. Okay, the words too small, you might not be able to catch it. The purple one, all right, last year was the worst. Emerging market has the worst return, all right, negative return, purple, because US market, the developed country are all, moving higher. The emerging market underperform, but if you realize in 2020 over here, all right, over here, they are, performing pretty well. if you take a look, you realize that they tend to move in like, take turns to move lah. Okay, just follow the purple one. I cannot draw just like this. Okay, so follow the purple one. Up down, up down, up down. Certain years they are good. When they are not good, this year they become good again. So 2021 was not a good year for the emerging market, but this year it seems that it is coming up. It is coming up. All right. Let me share with you this image right now. Just give me a moment over here. Here. Give me a moment. I can't find the screen. All right. So guys can see, right? So let me post the. Let me post. No, not post. Let me zoom in. This is I take this from Charlie Bilello. Okay, this is from Twitter. So he always sometimes posts a lot of interesting data stuff over here. So the date is as of 5th of March. 5th of March. All right. Do you realize that a lot of these countries are emerging countries, right? Peru, Brazil, Chile, Qatar, Colombo, Saudi Arabia. And of course, because of the recent Ukraine invasion and such, right? Those countries, emerging countries that can produce oil one, also produce very well. Okay, I think the returns are very well. The worst one, of course, is Russia lah. Russia, because of the war, the whole stock market just plunged to near 80%. That kind lah. Sweden, Poland, Austria, very near to the places, or Germany, all these are not performing well. The emerging market, they are all performing not too bad. All right. And if you take a look at Peru, Brazil, Chile, all right, they are doing very, very good. Okay. Peru, all right. EPU. You see, it's doing very well, right? So you don't have to die trade the US stocks. You can just trade the whole country, and you don't need access to the Peru stock market. You can just trade the ETF. All right. And let me go through, add in my standard indicators over here. Here. Okay. You can see that it was in a downtrend. Okay, and just broke above the cloud, and it still seems to me that the trend is still pretty nascent as in it means a new trend. All right. And for the Brazil is EWZ. All right, I share Brazil. Okay, so after a downtrend last year, all right, so this year it is pretty well when the whole US market is tanking. And Chile, okay, I have a position in Chile, so it is still profitable as well. So you can see that not the best trending, but relatively it is also trending higher. It's still trending higher also. Okay. And do you realize I mentioned before, take a look at the end of the first quarter. All right, you can check out the ETF, the sector, the industry, whatever it is. Those that tend to outperform for the first quarter, right? There's a high chance that you will continue to trend and to outperform for the rest of the year. So I am looking at these countries, okay, Peru, Brazil, Chile, Qatar, Colombo, etc. So my trade idea is that you don't have to trade the US stocks. You can trade the ETF, and some of these emerging market, they are not really affected by the US market. Of course, it's not correlated, correct or not? All right. And yeah, and before you get too excited, I know there are some ETF, they are called emerging ETF, like for example EEM and IEMG. But if you're trading this emerging market, you think that, hey, Alex said emerging market can trade, not these two. Okay, you need to understand why. All right, you trade the individual country ETF directly, not the whole emerging market ETF. Right, the reason is very simple. Okay, so you need to understand what is the underlying stocks or country in the emerging ETF. Okay, so EEM. All right, you go to etf.com/EEM. Very simple. Okay, it is the emerging market ETF. All right. Okay, what do you see? What do you see? All right, 26%, 27%, or near 30%. It is in, what's that? Hong Kong. Okay, and because we are Asian, we know what's happening around us. Hong Kong, Chinese, cannot lah. Okay, Hong Kong Chinese stocks cannot. If you go and check the market on EEM, right? It is down lah, because 30% is on Hong Kong. Hong Kong is all down, sure down one. So same for IEMG, it's the same. Okay, very similar IEMG. All right. Also by iShares emerging, you go and check. It is also Hong Kong. So yeah, cannot. So yeah, if you really want to trade, it is just trade the individual stocks directly. Okay, is everything okay with you guys? Everything understand about this emerging market thing? Okay, just type the letter E. Type the letter E in the comments. Yeah, so to take note, so I'm looking at these countries as well. All right. If US nothing to trade, then to trade US lah. All right. And for so understand, just type E in the comments. And of course, some of you might be asking, hey Alex, then is it now a good time to trade commodities or not? Okay. Previously, I was talking about commodities. I was trading commodities and such. I was trading the natural gas. Make okay profit and such lah. Okay, and right now, it is quite volatile lah. Okay, and price has gone exponentially up for crude oil. So, and you can starting to see it is I think it's going to kind of get messy and volatile. So for me, I won't be trading commodity right now, even though price can continue to go higher, but it is really too volatile, and I don't know where to place my stop loss. Okay, either you hold it. If you place your stop loss too narrow, you're going to get stop out one. So it's not that easy to trade. All right. Even for gold, all right, it is also after a breakout, okay, price just continue hit higher, burst up. So it's kind of exponentially. All right. And just to let you guys know, for gold, silver, and such metals, right? At this point in time in March, actually the seasonals is coming down. So of course, I don't want to fight against the trend. The trend right now is still very bullish. Okay, I'm not sure you're going to come down or not, and I also don't want to short it also. So I am going to stay out. Okay, yeah, I'm going to stay out. So palladium, all this, okay, yeah, I'm also going to stay out. So essentially for commodities, I won't be chasing all these extended prices because very hard for me to trade. I don't know how to trade. Okay, if you know, you can go ahead, but I do not know. So I also don't want to risk too much. So not at this moment in time for commodities. For wheat, okay, also no. Yeah, so it's too parabolic already. So I also will be chasing until price kind of settle down with a steeper correction. The kind when the news don't talk so much about commodities, right? Then maybe I will re-enter again. All right. Patrick is saying not focused. On my side, don't know. So it seems okay to me. Nobody is complaining for now, at least on the Facebook. Okay. All right. So back to this. Okay. So as I mentioned, all right, PBJ, all right, I mentioned last week. Okay. Also not easy to trade. Not easy to trade. You know, after I exited, as in after I take partial profit, you know, price just reversed all the way. So I've already exited PBJ also, just to let you know, PBJ. Okay, this run over here, you know, I took some partial profit. You know, after that I show my stop, as in I shift to my entry price. You know, and price just reversed, so I'm stopped already. So some slight profit, but right now price still seems supported right now. Again, this will be very dependent on the current market condition. If the indices and all this continue to go down, then you know the tide is down, so can be pretty hard for it, you know, to have some real momentum to head up. So you need to be aware of the overall market condition. Okay, even though based on seasonals, you know, it is up for the past 16 years. Okay, same for consumer staple XLP. All right, I mentioned, okay, also not easy to trade, and there's no trigger. There's no trigger. So price just continue to go down all the way. All right, there's no trigger. All right, so yeah, I didn't enter on that as well. And but okay, something interesting is on the real estate. Real estate is actually quite strong. All right, real estate, XLRE. Right, if you want to go deeper, you can just search the underlying stocks. All right, real estate pretty strong. Price is above the cloud and also at the yearly pivot. So much stronger than the rest of the sector. Okay, all right, and then yeah, but right now, yeah, the profit not much for me because really not easy to trade. Okay, when there's some profit, what's your take profit strategy? So essentially, you know, very simple for me right now, right? When price move, when I risk $100, okay, when I risk $100, my risk to reward are basically basically R is to R. If I risk $100, all right, price went up in my favor and I profit $100, right? I will start to scale already. Okay, I'll start to scale already. So I'll exit half and I'll shift my stop to the entry price. Okay, and my stop is actually quite tight. Okay, quite tight. I don't explain. I explained before. My stop is just about 1.25 ATR from my entry price. So price just need to move a little bit. You know, then I have some profit already. Okay, so yeah, this is not for everyone, but just to you, my stop is quite tight and move in my favor. One time I risk, I will exit half and shift my stop to my entry price. Okay, yeah, so I just protect my profit for the time being because market is really volatile. All right, so I hope that answered your question, Chris. Okay, and anything else or not? Yeah, so these are the few things that I mentioned. Okay, so I'm looking at this. Okay, for oil, I know some of you entered into Discovery. Just to share with you the price action. The price action for this car, which I mentioned, I have a position trade that actually is not looking very good on this car. I might consider exiting this car and cut my loss. Okay, I'm still holding on to it right now, even though price is below the cloud and the central pivot range. Because if I zoom to the 2-day time frame, you know, kind of like the last line of support over here lah. All right. Okay, I really don't want to see price to break the low over here. Okay, the low over here. If price below, then I might want to exit this car. So yeah, so this is a trade that doesn't go in my way. So I'm just willing to cut loss on this if price really to reverse back up soon. Okay, and I think I mentioned NOV. Okay, all right, NOV. NOV, I didn't show it in chart, but I mentioned verbally. So I'm not sure how many of you actually caught this. Okay, so NOV, this is pure luck. Okay, for NOV is pure luck. So this NOV is an oil related company, National Oil Vaco. So they do equipment. When I enter, when I enter, it is somewhere around here. Okay, somewhere around here, Okay, then it just burst up because of the war crisis and such. Okay, so simply because of okay, easy to see. Okay, I enter simply because actually NOV is lagging one. NOV is lagging because what the rest of the oil stock move, NOV is not moving. Okay, so the reason I enter is simply because the price just broke above the cloud, and I thought that give it a try. Yeah, and for NOV actually the fundamentals, like Deborah said, the financial fundamentals is also not perfect, not that very good. So I enter all these are based on technicals, not based on fundamentals. Okay, yeah. So I know what I'm doing. It's not based on fundamentals, so I don't look at the fundamentals. So I look at technicals. So there are a few more stocks that I was looking at. So previously I was looking at Las Vegas Sand also. Based on the data frame, initially, price broke out this, I was waiting to enter, but, price didn't give me an entry also. So I'm just didn't enter. So yeah, so there are a few stocks that I'm monitoring right now, but I won't mention right now. So yeah, so I'm just KIV, not sure yet. Okay, yeah. So for those who enter this car, just to let you know, I might exit just to be transparent with you because I mentioned that in my Facebook Live lah. So I think some of you follow. So yeah, I am ready to exit. Okay, so we'll see how it goes. Any questions so far? So right now we have still 260 people in the room right now. So Mary say you already exited. Okay, fantastic. So you know exactly what you're doing. Okay, so follow your rules. Okay, so I'm not God lah. So not every single of my trade will be profitable lah. Okay, so just to be totally transparent with you. All right. So any question? Okay, so if you enjoy my content, like my sharing, do give me a like and share right now. Do engage with me just to tell Facebook algo that you want to see more of my content on Facebook or even YouTube. If you're watching on YouTube, just give me a like and also subscribe to our YouTube channel. This will really help us a lot so that in the future, people can see more of my content in the future. Okay. So if everything is good, okay, just type good in the comments. Just give me some encouragement. Everything is good, just type good. Okay, meanwhile, I think I can still answer a few questions before we call it a day. Maybe another 10 minutes more. All right, not later by 1:30 lah. Latest by 1:30. All right. Derek is asking, I feel that the price need to drop below the recent swing low to catch out all the stop losses placed by the retail trader before price rises. What is your opinion? Yes, I agree with you, Derek. So there is really this possibility, like for the Nasdaq, S&P, and Dow. Okay, so yeah, so of course, as I mentioned, there are sure a lot of traders, place their stop loss below this swing low over here. So there's always a possibility, price, hit the swing low over here and then rebound up again. Okay, so we have to see. And yeah, what I mentioned is that I don't want it to, close below this candle, and within the next 2 to 3 days, okay, 2 to 3 days, price need to reverse back up. If not, then this is really like a real breakout already. Okay, so this is something that I'll be careful. And of course, based on the weekly time frame cloud, right, yeah, by then it should be below the cloud. If at the end of the week on Friday, if it's below the cloud and within, yeah, doesn't reverse back up, then you'll be wary of the market. Okay, so yes, there's always this possibility that price will go and retest the low over here. This is what the market would like to do, because there's always the most liquidity here at this swing low over here, and the market will always find a place where there is a lot of liquidity to do the transaction. Okay. Defense stocks go up. What is your take? Defense stock, yes, defense stock. Actually, I think if I'm not mistaken, the seasonals is also here already. And of course, before that, because of the war, they are already up already. So, for example, like, is it like IAT? Right, IAT? No, not IAT. What's the ETF? I also forget already. Okay. Go to here. ITA, sorry, ITA XAR. Okay, ITA. Yeah. So they are already up. Okay, so it's still on uptrend. Okay, Lockheed Martin, yes, RMT. Okay, they are already up because of the war and such. So again, this kind of action, it is quite parabolic. So I won't be chasing them. So it is the hot stock, hot industry at the moment. So for me, I don't like to chase this kind of hot stock. Can it go up? It can go up one, but I will just skip around. Okay, I won't be trading them. So let me take a look at my usual chart. Price need to at least come back, come back and test the CPR over here. Then I'll be interested to go long. If not, I won't be interested to go long. XAR, the ETF, just ping pong. Yeah, of course, certain stocks is good, but overall, I won't be keen to chase some of these individual aerospace and defense stocks. Okay. Alex, if over the weekend Putin decide to declare peace or ceasefire, next week we can go long. All right. So again, I will encourage you to just follow the price action. So if you want to try to pick a low, you can, which is like now. All right. But okay, if you really want to wait that the trend is up, price has to go above the central pivot range, okay, and then the yearly pivot and the cloud. So yeah, so just have to wait. Price has to go at least above the monthly pivot range, the CPR over here, because right now we are still early this month, March, still some more about 20 days to go, trading days to go. Yeah, so wait for the price to go above the monthly CPR. Okay, this is my plan. Okay, if you really want to go long, okay, don't try to catch the low. If you want, you can, but you need to be aware of the risk. Okay, it is quite hard to really catch the low. All right. So same for S&P 500, price has to be above the monthly CPR and also the yearly CPR. So right now, based on the daily time frame, we are actually on a downtrend. Okay. The reason why I say I'm still bullish, okay, is simply because of the longer term time frame, which is the weekly time frame. Okay, weekly time frame. This is the longer time frame analysis, multiple time frame analysis. Okay, daily it is down. So so I don't like to, you can wait, okay, to be safer, you can wait until at least price is above the monthly central pivot range. Okay. This is a very long question, Darius. Let me see. Realize you use pivot stacks indicator for weekly and monthly, but you use SDCPR for yearly. SD, you can use the can no, because because for the pivot stacks, there is only daily, weekly, monthly. Okay, and for SDCPR, yes, because I don't like to toggle. You need because okay, how should I explain? Yeah, because this one is very simple. For pivot stacks, I don't want, I can just shift very fast, very easily. Okay. Whereas for STPDR, right, I need to really go to the style, uncheck. Okay, so it's more leceh, okay, more mafan, more troublesome. So I just put two. So anytime point time, I can just hide and also just check input, blah blah blah, pop, then okay already. Okay, so it is okay. So if you are comfortable with the SDCPR to put all, I think that is fine as well. Okay, nothing wrong with that. Yeah. Okay. Suswa is asking, do you use or take reference the previous month or the year? I will take both. All right. So the monthly, you mean the previous month or year CPR? No, I won't take the previous month. I will only take the current month. That is the most significant support and resistance. Yeah, I'll take the current month and the current year. All right. Would you consider BA? Is Boeing Boeing no Boeing, yeah, I think I looked at the chart before. So Boeing difficult to trade, right? Like very rangy, very noisy, and of course, it is still below the cloud, below the pivot. Okay, weekly below the cloud, 2-day time frame below the cloud, weekly below the cloud. It is just screaming downtrend to me all the way lah. So there's no way I will want to buy BA. Okay, at least above the monthly CPR first, slowly above the yearly that kind. Then he can consider looking at that lah. All right. Is it recommended to put some money into bond ETF? This one I have no comments because I don't really put long term into bonds, be it the 10 years, the 30 years, the kind. Yeah, I do trade bonds. I do trade the TLT. Okay, but basically it is just for trading. It is not to get the yield or to hold for long term. So ST, I don't think I can recommend you this. If you're talking about trading, I can trade, but holding on, put some money into bonds, that kind. I think not my expertise. If you're going to put money into bonds, you might as well put into the Singapore savings bonds. It is nearer to us. We are our home country. It is guaranteed. Anytime can take out. It's protected by the government. So might as well put into the Singapore government saving bonds. Okay. Yeah, that's my opinion. All right. Okay. Yes, remove already the banner. What are the correct indicators to set for day trading? Okay. For day trading, right, you can set the pivot stacks, okay, to daily and to weekly, right? This will be the key settings because you're trading the daily time frame. All right. So let's say, for example, the Nasdaq. All right. Okay, naked chart. Then go to 15-minute time frame. You can go to see the daily, okay, and the weekly. All right, 15. All right. Yeah. The purple one is the daily CPR. Orange one is the weekly CPR. So this will be for day trading now. But again, I don't really day trade and I'm not good at day trading. So yeah, don't ask me that. I cannot help you. Yeah, I mostly do swing and position trade. All right. Realize that I use weekly CPR to analyze 15 minutes chart at the pivot point. Yes, because sometimes I want to see what is the market doing on the intraday basis. That's why I look into the 15-minute chart, and because intraday I'll be looking at the daily pivot. So yes, I use 15 minutes and the daily pivot. You can look at the 5 minute, it is fine as well. Yeah, Ken, what is your take on the SM? SM? SM energy, is it? Is that what you're asking for, Kenneth? SM Energy, oil and gas production. SM looks pretty trendy. Okay, it is still very nice uptrend. It's not parabolic. I think that is fine above the cloud, above the pivot, above the yearly. So again, it is still screaming uptrend to me. But of course, um, the devil is in the details. How do you trigger? How do you enter? And such, your trigger, right? When do you trigger? If you want to do position, when's a good time to enter, that kind of. So yeah, for me, I didn't look at that so in depth. So yeah, but if you're talking about swing trade, you can hold. Okay, it's on a nice uptrend. All right, Ken. Yeah, I think that's about that. We are at about 1 hour 30-minute mark, and we are at about 1 a.m. already. So that I think that's all for today. Last call to subscribe and register for the Market Insights Virtual Summit that is coming up. Okay, I post a link in the comments. Okay, and this ebook, right, you will only get it when you register for this event. If you don't register for this event, you will not get this ebook. So this Trend Master, how to spot any trends in just 3 seconds, that's written by me. Okay, and you also participate in the lucky draw. You get the explosive art of explosive profit, Huawei watch, and Lazada voucher, all by just registering for this event. Nothing to buy. Okay, at the end of the summit, we will draw out the winner. Okay, so very simple. Just register for this event. All right, first name, email, and mobile, and you are good to go. And the event is on 9 and 10 April. Still got about 1 month to go. So do register for this event. I'll post the link once again in the comments. Okay, so it's getting late already. Yeah, so have a good weekend ahead, and I will see you guys again next week, and we'll see how the market goes. Okay, so have an enjoyable weekend, and I will see you guys again next week. Good night, one and bye bye.